Are you looking to make $10,000 or more per month? Well, I've been helping investors scale their portfolios for the past 5 years on YouTube, and I've been trading for the past 10 years. In this video, I'm going to be showing you some proven facts and ways and strategies for you to scale your wealth. I really respect your time. Let me give you the first 1-minute summary. If you don't have enough time, you're trying to bounce off of this video and you're in a rush, here's the 1-minute summary, and then I'll give you the full overview. The 1-minute summary is if you want to scale from like 100K to 500K, what you should do is the wheel strategy, leap options. You should actually be buying some options, maybe 5% of your portfolio, and then you should be using spreads. I would do 70% wheel, 20% leaps, 5% buying options, and 5% spreads. That's basically what the doctor ordered. So there's your prescription. Use these strategies and use them on the high quality companies that I cover on this channel, like Palantir, Nvidia. I'm about to cover these stocks right now, and Tesla. Use these strategies on high quality companies that are growing. Use it. That's the secret sauce. You will scale from 100K to 500K if you just use those strategies and use them on the proper stocks. All right, now that I've gotten that out of the way, if you have some time, let's talk about the full guide here on how to actually do that. I'm recording this video in the evening because I was sitting here and I felt really passionate about taking myself back in time from when I scaled my portfolio from 100K to 700K. And I was just sitting here, I was just saying, God has been good to me financially. God has been good. I've been very blessed to get my portfolio to a very good level where I can now retire and live on the funds that I have in the portfolio. And I've been thinking to myself, if I could tell someone from the very beginning, or someone that has multiple 5 figures or 100K, how can they scale? How can they really take their portfolio from 100K to 500K? Basically like what I did, from 100K to 700K. And it got me thinking, what would be the fastest way? Well, here it is. I would use Palantir, Nvidia, Tesla. I would also use some other high-flying companies that have good momentum, but still very solid fundamentals. So I would look at companies that have solid fundamentals that are growing, and I would start by doing the wheel strategy. This is the simplest strategy. This is the strategy I've been covering for a long time. However, if you want to actually scale your portfolio aggressively, guys, aggressively, I mean quick and actually get fast results, you will need to do some option buying and you will need to do some leap options. I've covered leap options very recently on a Palantir video that I made, but basically, let me show you an example of what I would be doing with leap options. I would use leap options all across the board. Let me start off with Tesla. Tesla, for me, honestly, like looking at what Elon Musk is doing, Elon Musk has influence in the White House. If you don't think that's going to affect Tesla positively, you're out of your mind. Tesla is going to get a big boost from the regulatory side. I don't know to what extent, right? I've said in my last video, I don't know to what extent, but I'm very bullish on Tesla. Tesla's currently at $320 per share. My average cost is $218 per share. Told you guys to get in, but I still think there's opportunity here. So if you want to scale up from like 100K to 500K, I do think Tesla will be a $2 trillion company. You can watch my full analysis on Tesla. I believe it'll be $2 trillion in probably in the next 2 years. And what you should be doing is just honestly doing some leap options. So let me show you an example. I'm going to go to trade. I'm going to go to buy call. I'm going to go and just buy a leap option. A leap option is just anything long-term. Okay, a long-term call option, essentially. So a long-term call option technically is 180 days out. It's 200 days out. So all of these expirations right here would be perfectly viable. Now, I'm going to go for September 19. I just like September 19. I think it's a good expiration date. Well, my screen there changed to dark mode. I think September 19 is really good. So I'm going to go for something that's already in the money. Now, guys, the reason why you want to go in the money is because it gives you that upside. If you go for an out of the money option, the facts say that options typically expire out of the money. So an out of the money option is not going to be really your best bet if you want profitability and you want to scale your portfolio from 100K to 500K, or really anywhere from 50K to 100K, whatever, right? Whatever your big goals are, I encourage you that it is possible. You will make it happen if you properly trade, if you properly get in with proper delta. Out of the money options, not really suitable. I don't recommend them, and I don't personally use them, and I have not really used them to grow my wealth. The way I've grown a lot of my wealth is by going for in the money. So for example, I would go for something like, let me just expand this, 73 delta, perfect. It's like I have another sense for these options. I know pretty much exactly what I'm looking for, which is a 70 delta, right? I picked a 73 delta. I already knew that because this option is pretty much in the money by a lot, but it's not super like crazy in the money. This is just in the money by about $45. So 25, and then Tesla's at 320. So this is currently $45 in the money. That's pretty good. And you can see how if you had to buy 100 shares of Tesla, it would be $32,000. It would be 100 shares of 320. But this 275 call is going for $9,300. So in my opinion, I mean, you're spending 1/3 of the cost versus buying 100 shares. What do you think is going to happen? If it goes up, you're going to get a huge leverage factor. You're putting up 1/3 of the capital, 3 times less, and you still get to control 100 shares. That's why, like, sometimes I debate. Back in the day when I was buying shares, I honestly debated that options can just completely replace shares altogether, because an option gives you control of 100 shares. So when you buy a call option, you have access to 100 shares. It honestly doesn't even make sense all the time to own shares when you can own a leap option. I'll give you 2 different variations, by the way, because right now you might still be thinking to yourself, well, this option's expensive and it doesn't exactly move like stock. Let me explain very, very simply. The 275 call option right here, it's going for $9,300 and the delta is 0.73. That means if Tesla goes up like $10, this option is going to go up by like $7. So it's moving similar to shares, very similar actually, but not exactly, because shares, if it moves up $1, you make $1. But on an option, if the stock goes up $1, because your delta is 0.73, you'll make 70 cents. However, you make $1 on the shares. Here you make 70 cents, but you only put up $9,000 instead of $30,000. So 70 cents on 1/3 of the capital technically is like $2.10. I'm multiplying 70 cents by 3. You can see it on the screen because, well, we're only putting up about 10 grand versus 30 grand. So if I were to do 3 of these leap options, that would then be 30 grand, like buying 100 shares. Therefore, if I do 3 of these, I literally control about $2.10 for each $1 move in the stock. So basically, if the stock goes up $1, this leap option goes up 70 cents. But because this leap option is like basically 3 times cheaper than owning 100 shares, that means I can own 3 leap options. And if I were to compare 100 shares versus 3 leap options, the 3 leap options will actually be 2.1 times stronger on the upside, okay? Because the delta here is about 0.7, so I'm just multiplying 0.7 by 3 times, which is about 2.1. So I actually get double the strength for the same amount of money. That's why leap options are so powerful, okay? Let me actually show you a different little variation here though. If I were to go for something like the 200 strike, you can see this is a lot more expensive, but it's literally now 0.88. So this is about the same, if not very, very similar to just the stock itself. So when the stock moves up $1, this leap option is going to look pretty much like stock. There's almost no difference, except you get to put up a lot less capital. In fact, half of the capital. So this wouldn't be as good because you can kind of do the math for yourself here. This is about half the cost of Tesla if I were to buy 100 shares. And I can pretty much do 2 of these leap options for the same price as 100 shares. And 2 times 0.9 is 1.8. So here I get 1.8, which is like I get 180% of owning 100 shares. So in the first example, we got 210%, and here we got 180%. Long story short, basically buying leap options gives you control and upside on the stock. So hopefully you guys understood that. I'll make a lot more simple examples now. So look, one of the also most important things that I want to tell you about is that with Tesla, for example, my parents, they bought Tesla 4 years ago when Tesla was at a peak. Now, my parents are doing okay, but they definitely have that Soviet Union mentality where they're afraid to invest their savings, right? They have some money in real estate because they believe in hard assets more than option trading and stocks. But options are way better because they don't take much time. So I always try to convince them of that. And they've recently realized, yes, options are better because Tesla went up and they're like, we made so much money. I'm like, yes, but you would have made more money had you dollar cost averaged. Okay, so here's how you can actually dollar cost average, not just with stocks, but with options as well. Okay, I'm giving you guys a lot of new information. You can actually dollar cost average into leap options. So let's say that you buy a leap option like I just showed you, right? You can actually buy a leap option every single month or every single 2 weeks as you have money available. You can dollar cost average into a leap option just like you dollar cost average into shares. So literally, I am bullish on Tesla. I'm bullish on Palantir, which I'll cover in a moment. And I'm also bullish on NVIDIA. So what I would be doing, if you want aggressive growth and you don't mind the risk, please be aware that buying options has risk because when the stock market goes down, these options will be worth less. Now, because they're so deep in the money and they are very similar to stock, you are unlikely to lose the entire premium. you're not likely to, because these are very deep in the money options. Like Tesla's not going to go to 200, but you can lose money if we enter a bear market. And I will tell you one thing, when I was working on Wall Street and I basically had multiple jobs, and all of the people that I worked with all basically said the same thing because they're all making tons and tons of money. Okay. I was at one hedge fund and basically the quant told me stocks have a tendency of rising. Okay. That was rule number one. Rule number two, I had an internship at Group 1 Trading in New York City where I was working on the floor, the New York Stock Exchange, and it was a very volatile day. Still remember it. And I sat next to this trader who was making about $12,000 to $15,000 a day profit for himself because I could see all the P&Ls. And I told him it's a really volatile day. He smiled. He's like, yeah, but I love volatility. I was like, why? He's like, volatility is great for options, especially when you sell them. So that also like really changed my mind, right? So I was like, there's actually a lot of money to be made in the option market. And across the whole board, I don't worry about bear markets, guys. I've been through some tough times. I know some of the common complaints about me, it's not really a complaint, but some of the hindrances before someone becomes a student of mine, they say I'm too young. Well, I've actually been through many tough times. Yes, I didn't go through 2008 because back in 2008, I wasn't really trading. I didn't have any money. I was like, in high school or something, right? But I've been through COVID and I've done perfectly okay. Yes, I had a declining 6 months. I lost $250,000 back in COVID times. I made it all back and more within 6 months after that big fall, that big crisis that we had. And I've seen many other crashes and I've done just fine. I never worry about bear markets because my strategies that I teach on this channel are time tested. And I've been a coach for 4.5 years and I have so many successful students. None of them lose money if they actually follow what I do. Some people lose money because, some people will get into my Discord and they just don't follow what I do. They do their own thing, which I don't really understand. Why would you join the Discord and do your own thing? But a lot of people, they just do their own thing and they go for really risky stuff. I always tell people, if you follow a formula that works, I've been doing this for a decade, you will get similar results to me. And if you want to scale from 100K to 500K, just follow the simple formula. I have it all laid out in my Discord. It's literally, like I told you in the beginning, we're going to use high quality companies. I just showed you leap options. Let me go into the next stock and next strategy or the next idea. My next strategy, my next idea, because I want to get to the point here as fast as possible, give you as much high impact, actionable insights, is go for safe passive income. Yes, buying options it can be very lucrative, but still the way I buy options is long term. Like I just showed you a September expiration. You want to get into the trend ahead of time. Why do you guys think I correctly predicted Palantir, Nvidia, and Tesla? It's not really because I'm a genius. It's not. Maybe I'm above average. I don't know where I'm at. But I'll tell you this much. I'm not a genius. And the way that I've been able to predict stock after stock after stock that outperforms for years now is that I'm following the trend. I'm doing my research on what I believe to be on a positive momentum trend. I made a video recently, Momentum Wheel Strategy. I've talked about momentum. And actually at one of the hedge funds that I worked at, we had a quant. I was a quantitative analyst. And this was back at PNC in Philadelphia. Okay, I worked at the bank. We looked at different factors. Okay, it's called factor analysis. And one of the biggest factors of all was a momentum factor. Okay, and this makes a lot of sense. This will blow your mind. But when a stock is doing good, it's likely to continue doing good. Mind blowing, right? But that's what momentum means. So what I'm doing, guys, is I want to be early on the trend and then I want to ride momentum. If you can do two things like that, you will get stupid rich. You will get insanely rich to the point where money doesn't matter. Like for me, money doesn't matter. I'm not on YouTube because I need money. It's definitely not the case. I'm here because I feel super passionate and this stuff has changed my life. And the two biggest things that will change your life if you want to make a lot of money is be early on a trend. Unfortunately, we are not early anymore on Palantir, Nvidia, and Tesla. But good news is I personally believe number two, okay, we're not early in the trend, but number two, there's still a lot of momentum to come, which is why I keep making videos on these stocks. And that's why you have literally money falling out of your pocket. That's literally what it is lately. It's just money is falling out of your pocket because I'm looking at momentum. It's positive and I'm riding momentum. I'm not worried about a bear market. And if you want to scale from 100K to 500K, you can't worry about a bear market because bear markets happen, but every single time I've gone through them easily. All right. So look, go for safe passive income, even though we're going to be doing some buying option strategies, which I'm going to show you in just a moment. Okay. It's still
pretty safe and passive income, even if you buy options, because we're only using 5% of our portfolio. I'm not going to recommend that you use more than 5% of your portfolio for straight up buying calls, because I believe that 70% of your portfolio should be the wheel strategy. I've been I don't know, what do you want to call it, an evangelist? I don't know. I've been like the man of the wheel, okay? The wheel has changed my life because it's so simple. It's like a system, it's a process, and I've been running it over and over again. Like if I go to my portfolio, actually, there's a big expiration date, so I have, it's okay, so a lot of my options expired. You guys know that in the last video I went over all my options. Now they've all expired, right? Because I'm recording this basically Saturday morning. It's like 2 a.m. for me. But a lot of my options expired, so I can't show you all of those wins, but I'm still running the wheel strategy that's even expiring on 11/29, 12/20, 12/20, 12/20. I do prefer monthly options, so all my current expirations are going to be going out to 12/20, because when you open up options on a monthly basis, it's very low work, and I believe in longevity. Like I want to, trade for the rest of my life. I hope that's many more decades. I hope to coach students for many more decades to come. That's my goal. And when it comes to longevity and scaling your portfolio from, 100K or 200K or 5 or 6 figures to the next mark, which is 6 or 7 figures, or 6 and 7 figures to 8 figures, which is the path that I'm on right now, you need longevity. You need to have balance in your portfolio. You have to properly manage risk. You have to properly manage your positions. You have to have proper diversification, okay? And you can't just be in the top 3 companies like Palantir, Nvidia, and Tesla that I cover on this channel. You can't. You still need the other stocks that I cover. I don't cover them on YouTube. They're not as popular, but the other stocks that I cover are just widely just blue chip stocks. Like there's nothing crazy about them. I buy good quality blue chip stocks because I studied finance. I have a degree in this stuff. And after like reading every single Warren Buffett book, after being mentored on Wall Street, I realized that blue chips are kind of like that cheat code to scaling your portfolio. If you want to scale from, again, 100K to 500K, as the title says, you can do so with Apple. You can literally do so with safe companies. You don't need to recreate the wheel. You can run the wheel. No pun intended, right? Trying to make some jokes here as it's late. I just feel compelled to make this video, right? I could be relaxing right now and messing around and whatever, right? But none of that matters to me. I'm dialed in, I'm focused, because I'm trying to make you guys as much money as possible, because that's my mission, that's my passion, that's what I like. So, and by the way, if you appreciate that, just subscribe. It would mean the world to me. That's what I'm here for. I want to help more people. So tired that let me keep going here. All right, guys, let me wrap things up with just saying that I'm looking at my notes here because the next stock that I want to cover is Palantir. I'm just really fired up. Like, it's evening and I'm still fired up because the opportunity is just so big. It's so big right now on Palantir. We've made so much money on Palantir. It honestly feels like we're printing money, and the results that they've come out with, like 30% year over year revenue growth, insane. US commercial growth, 44%. And I've said, guys, that the commercial growth is probably more important than the government contract growth because it's all about expectations. The market is about expectations. Because the market already expects Palantir to win, you guys you're not geniuses, and neither am I a genius to say, oh, Palantir's going to do good with government contracts. Duh, they're going to do good. Of course they're going to do good. They've been doing good. So this isn't a risky bet. So the market already has that baked in, guys. It's already baked in like a pie. It's already priced in. That if it's priced in, you can't make money. The way you make money is when something is not priced in. I personally believe that the commercial growth for Palantir is not fully priced in. Now, I'm not saying that Palantir is going to explode as a stock in the near future because it has already done some exploding, but in the longer term, I would sell put options on Palantir. So I showed you a buy leap option on Tesla because I think Tesla has a clear path to 2 trillion. With Palantir, we also have a clear path here to a lot of gains, but because we're currently at $66 per share and I'm up a whopping $228,000 on this stock, which is, hey, if you've been part of the channel, you already know. Uncle Henry picks the best stocks for you to make money. You already know. All right, we're going to stop bragging and we're going to get to the facts. The facts are Palantir, I believe, will go into some sideways action for the near term. And in 2025, it will reach $80 or more. In the near term, I would look for a better entry. I mean, guys, how can I get excited about Palantir when the stock is up 11% in a day? I don't want to be a fool. I don't want you to be foolish with your money. You worked really hard for your money. That means that I want to respect your money, like I respect your time. And I can't say that you should buy call options or go too aggressive on Palantir right now. You should look for optimal entry and you should maximize your profits as much as possible. And for Palantir, I would say that we want to look for an entry around $60 per share, okay? Because if we can get in 60, I do think that's a decent margin of safety to own the stock. So what I would do is I would go for January 17. I would look for a shorter term pullback to jump into the stock. But you know, selling $60 puts right here, they're going for $340. So you will tie up about, $5,500 and you're going to make about $300 for doing that. I would say that the return here isn't massive, but it is a good return of a few $100s to get assigned on Palantir. If Palantir goes down, you will thank me later, because if you are going to own shares and it goes down, you get hurt right away. But if it goes down and you have a margin of safety, like right here, Palantir is at 66. If you sell a 60 put for $340 worth of premium, I mean, you tell me what's better. You already know, right? If someone has a $66 per share shares and it goes down to 55, well, that person lost $11, right? 66 to 55 is $11. But if you sold a 60 put for $340, I mean, it goes to $55 per share, you will be down $1.60, but you're really not down that much. You're only down $160. Whereas other guy, the shareholder, is down $1,100, right? $1,100. So $1,100 where you're down $160. I mean, that's literally like a 10x difference. So it is a 10x difference. Now, if Palantir decides to take off a lot more, I will show you one. Let me show you a buying strategy play, which you can run, because I do think Palantir, I do think it can hit $70 per share. So I would do a bull call spread. All right, let me explain this. All right. Now, I hope this video is jam-packed with a lot of info. So I know it's going a little bit longer, but I'm hitting you with strategies and I'm hitting you with what I think will make money. So, look, 65 right here. If you buy, okay, let's go to buy 65. Okay, we can buy the 65 call option. Okay, that's going to be kind of expensive. But then if we sell the 70 call option, this right here, this will help you scale your portfolio fast. Like, you will take 100K to 200 to 300 to 400, even if you're using a portion of your portfolio for a strategy like this call debit spread, which I call the bull call spread, okay? They're just two different names, right? They're the same thing. Look, if you buy the 65 call and you sell the 70 call, you're subsidizing the cost of the 65 call with the 70 call. So you're going to be having a total cost of $220, but you have a total reward here of $500. You're putting up $220 to make $500. This isn't a 60-day period. This is 2 months, guys. That means if you're putting a portion of your bigger portfolio, like 5K into this position, that 5K can be 10K, right? In 60 days. Obviously, you don't put in too much money into this position because we use our mind here and we diversify and we have 10 positions at least in our portfolio. But this right here, it's a powerful strategy. Buying a bull call spread on a high momentum stock like Palantir, which has 30% revenue growth, right? Has 44% US commercial growth. The guidance, by the way, is freaking fantastic from Wall Street, which is really important, guys. That's also why I'm still bullish on Palantir, is because the guidance is strong. Guidance, future, okay? That's what people care about. People don't care about the past. Many of you guys have already forgotten that I put literally tens of thousands of dollars or hundreds of thousands of dollars in your pocket with all these plays. We're thinking now, what's going to happen in the future? And I understand that, guys. It's human nature. So I'm here to provide that value and tell you how we can get even richer, how we can get more money. And that is going to come from guidance. Guidance on Palantir is strong, which is very important. I mean, if you're looking to scale your portfolio, you got to take some aggressive bets. You're not going to get rich aggressively by just selling options with 100% of your money. If you really want to scale, and I mean scale quick like I did, you are going to have to do some smarter and more aggressive buying strategies. And I think that this could be a really good buying strategy. Just like I told you on Tesla, buying leaps on Tesla, buying bull call spreads on Tesla has literally printed money in the Discord community. I was just thinking about one thing. I got to share this, all right? Guys, I like taking risk. I personally like taking risk. I'm a risk taker, and that's why I've had a lot of good results, is because I use calculated risk, right? And I have my own coaches. I'm still in contact with folks on Wall Street. I still get coaching from, former Goldman Sachs professionals who are really freaking high up, because I understand the power of mentorship. Like, I'm still learning. I'm still improving, guys. I'm 10 years at this game, and I'm still getting better. I think that's what makes me the best on YouTube, because the only people that are better than me are definitely not on YouTube. They're professionals that already have 8-figure net worth. They've already made it. They've made it way more than me. I have mentors that are way richer than me, and that's what you want. That's what I want. I want to look up to people, and I want to grow to the next level. And I'm bringing all that wealth and all that knowledge to you guys here on YouTube, because I don't see anyone else doing that. All the other YouTubers, they're taking my wheel strategy and they're regurgitating and copying my content, but that's not how you actually improve, guys. You need to improve by actually getting better, by picking the right stocks, by picking the right delta, by understanding rolling. I made a recent video on rolling, by using leaps, by diversifying, there's just so many things that we can improve on. The risk management side of things. When do we get out of a position? All of these stuff, by the way, it's always something that I am improving. It's always something that I'm getting 1% better. I'm always trying to get 1% better when it comes to my trading, because if you can avoid even one big mistake per year and get a little bit better at the wheel strategy and managing it and picking the right stocks before earnings. By the way, if you're at this far in the video, I want to give you a little golden nugget that I'm about to cover on NVIDIA stock, because NVIDIA has earnings very soon. If you're watching this in the future, every time a stock has earnings, it's very important. But specifically, I'm going to make a NVIDIA video right before earnings here, because that's going to be a big, big opportunity, okay? When it comes to a stock that reports earnings, that is the golden opportunity for you to make fast cash. Okay, if you're looking for fast cash, fast money, Goldman Sachs actually came out with some research that said 3 days before earnings, you should be buying call options. So that's what I'm going to be covering in tomorrow's video. Make sure that you're subscribed. If this video is already getting old and you're watching this in the future, always prepare for earnings. Be very vigilant on earnings, okay? Let me show you right now what I'm going to be looking at when it comes to earnings. I'm going to use NVIDIA, because before earnings happens, I always try to understand how big will the earnings be in comparison to the expectations. I don't care how big actual earnings will be. I care how different it will be from expectations. Because when you get a shock from expectations, that's when you get a big move in the stock. I have a really small position on NVIDIA in this portfolio, because my other portfolio is where I have a few thousand shares of NVIDIA. And this portfolio, I'm taking it a little bit light. I mean, it's $42,000. It's not that light, but it's fairly light. And what I'm looking at right now, if I scroll down with Robinhood, they do have several interesting and analyst ratings and stuff. I'm my own analyst, guys. I don't look at analyst ratings. I'm my own analyst. I listen to myself. I don't look at really too many analysts. You know, it could be an interesting opinion, but I listen to myself and my own research at the end of the day. Look at these earnings. This is actually really interesting, because NVIDIA has met earnings each time. But it did meet earnings here, but here it beat earnings, beat earnings, beat earnings, met earnings, beat earnings. I have a really good feeling of what's going to happen next. Mark my words. And I'm going to, you know what, I'll just cover it tomorrow's video. Not to leave you on a cliffhanger, I just feel like it's not that relevant to this video on scaling. Let me give you this short summary. I'm going to explain it more in the other video. I feel bad leaving this video without telling you. I think that NVIDIA will beat earnings, but I think the stock won't move up that much. I'll give you the full explanation later. But in general, what you want to look for, and NVIDIA doesn't really have this pattern right now, it doesn't really have this pattern, is you want to see 3 consecutive huge beats, which is not the case for NVIDIA. Let me show you a different stock. I'm going to find a different stock that has actually Palantir. I think Palantir will be a good example. I'm going to show you Palantir. NVIDIA doesn't quite have that trend. Palantir has it like crazy. Palantir has huge beats. You see the difference here is massive, 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 and massive. When you see massive beats, that's a much better indicator. And I would jump into 3-day call options 3 days before earnings, because Goldman Sachs already proved that strategy returned 95% in a week during earnings week. So it's a little bit longer of a story, because obviously that is on a larger set of data, and every single study that they have is obviously to some degree. Obviously with data you can cherry pick, so I'll go over that in a future video. If you're interested, comment down below. Sorry if there was some rambling in this video. Obviously it's late for me, but I wanted to give you guys as much jam-packed value as possible and give you as much insight to help you improve your trading. Make sure you subscribe, and I'm going to put an important video on the screen for you guys to watch if you have some time right now.